Welcome to Bunnex Investment Group. In this video, we are going to talk about the weekly structure and how to predict the midweek reversal. So the midweek reversal is actually one of the easiest trades that are available to us. So the method is simple and can be applied to several trading instruments, but mainly for Forex. So you can as well try it on cryptocurrencies, indices, and so forth, but it's mainly used on Forex. But before we go through, make sure you subscribe to this channel if you haven't done so, and check the notification bell icon if you haven't done so as well, so that you won't miss any of our videos as we upload. So in this video, we're going to explain this in three parts. We're first going to define the weekly structure, which is the most important thing that we are talking about for this particular subject. Then jump over the TDI hack and the setup to look for whenever we now understand the weekly structure. Then have some examples on that particular setup. So stay tuned and stick up to the end of this video so that you actually grasp the whole concept and comprehend it. So as I've said, the first topic is going to be the weekly structure. Actually the major topic of this video. Each and every week, a high or low is set. I'm sure if you have been following up in the markets, you know that each and every week has its high and has its low, no matter the consolidations or anything. So when price reaches the high, we expect to see a market reversal, right? Whenever we see a high, we expect to see a market reversal. However, no one knows if we have reached the high of week or low of week. And this same concept also applies when it sets a low. So if we reach a low, we also expect to see a reversal. So the weekly structure is observed on the H4 time frame, which is the 4-hour time frame. If we switch our trading platforms to the 4-hour time frame, we can easily see the start and end of the week using the black traces or the time separators that are available on several trading platforms. So we use the previous week as our reference. What we are saying, if we put the markets on our charts on the H4 time frame, there will be black traces that demarcates the start and end of each week. So in this case, the start of this line to the end of this line will be representing a period that is equivalent to a week, and the start of this line to this line will be another week. So in this case, if we say we are in this current week, we use the previous week as our reference for the next concept that we are going to explain. So when the current week breaks the low or high of the previous week, let's say we have movement of price like this. This is high of week and this is low of week. We can predict the midweek reversal of that current week with a higher point or with a high degree of probability. So what we are saying, if this current week breaks this low of the previous week, or if it breaks this high of this previous week, it's easy to actually determine the high or low or midweek reversal of this current week using the next concept that we are going to talk about. So make sure you stick up until that point. So illustration of what we are trying to put across is this. In this case, we have this week and this week and this week and this week, right? So in this case, we can see this week setting the high of day. This is just an abbreviation to say high of day, which is HOW, and high of week and low of week, LOW, like that. So we can see that in this particular week, we did not break any of these two. We did not break the high or the low. So structure still inside. So midweek reversal cannot be determined. It's very, very difficult to determine the midweek reversal in this kind of scenario. So the midweek reversal will be determined in something like this, whereby you can see that we issued the high of week and the low of week, and the market actually broke the low of the previous week's price. So the low has been broken, therefore midweek reversal can now be determined. If this happens, we can now determine where we are going to see a midweek reversal, right? So how do we determine that midweek reversal? We use the TDI. So after breaking of the low or high of the previous week, the next thing is now to find the midweek reversal. So the first thing in scouting for trades or for this particular concept in your trading, you need to see the highs and lows of weeks and then actually stock the market until you see the high or low has been broken. Then the next is we can now use the TDI shark fin with an H1 corresponding MOW to determine the high probability midweek reversal. What we mean by that is, right, I've seen that this is the high, this is the low. I need either of them to be broken, and after seeing them being broken, I need to actually now determine where this is going to occur, and that is where the TDI shark fin will come into play. After the TDI shark fin shows me that this is a high probability midweek reversal, I will need an H1 time frame corresponding MOW on that point of high probability midweek reversal, right? So the simplified steps will check the previous week's high or low and draw a line on those prices. High or low and draw lines on those prices. Then wait for either of those lines in the current week to be broken. So we are saying wait to see break of the high of the previous week's high or previous week's low to be broken. Then now stick your eyes on the TDI to see a shark fin as the first sign of reversal, right? So the TDI should actually be seen, and after that we now go to the H1 time frame. If an MOW presents, jump into the trade without fear. So here are the examples of what we are trying to put across. In this case, we have the previous week and the current week, right? In the previous week, this was the high and this was the low in this dotted white line, which was broken at this point. After the market broke, our eyes should now be on the Traders Dynamic Index or the TDI to see a shark fin, which was issued at this point. After a shark fin has been issued, we are saying check for shark fin on the TDI. After the shark fin was issued, we now switch on the H1 to see, and in this case a W on the H1 time frame, so that we will enter the market, and the market went into this direction. It was a valid midweek reversal. And another example, we can see that this was the previous week, right? And then this was the current week, in that the low of the previous week was broken at this point. After break of this low, we can see that actually we said after breaking of the low, we now stick our eyes on the TDI to check for the shark fin, and the shark fin was issued at this point. After the shark fin was issued, the next thing is to switch to the H1 to see if a W in this case was issued for entry to go up as a midweek reversal, right? Then in this case, it was a sell example. We had this as the high of this particular week. After that, we can see it being broken at this point, and after that was broken, the next thing is now to stick our eyes on the TDI, and a shark fin was issued. Then we need a pattern on the H1 time frame so that we enter in that particular direction. So like any other trading methodology, we are not saying this is going to be 100%, but it also helps if you have already some other techniques that you use in your trading. If you have some other techniques, you may actually incorporate this H4 time frame trading secret, and you'd see that it will simplify your trading, because the whole goal is to have a simple trading system that you can stick to no matter in losses or in wins. On that note, we come to the end of this video. Thank you for watching. like and subscribe, and check out our free Telegram channel. I'll leave the link in the description box below.